Hi everyone, and welcome to this episode of Money Moves. For this episode, I want to do some technical analysis of the major indices, something that I haven't done in a while. So I'll hit the S&P 500, the NASDAQ, and maybe a few precious metals. Then I'll go over each of my investments, starting with worthy bonds, GroundFloor, my TSP, Fundrise, M1 Finance, and of course I'll go over my options portfolio on Robinhood and Tastyworks. Then I'll finish up with my monthly tracker and the progress of all of my investing accounts. Then of course there will be some jelly at the end, which is something I enjoy outside of the markets. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as individual stock reviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. Looking at the S&P 500, you can see we've been on this massive bull run, just to give a little bit of context, generally along this line until we started slowing down here in April of this year. Then we've stayed generally within these trend lines until we finally broke down here on September 20th, and we've been in this short-term downward channel for around the last month or so. Now the expectation is that this is going to be a short-term correction similar to some of the ones we've seen here in the past. Just about a year ago, again in October, we saw similar movements here in March, and then again later in March, and then here in May. You could say this is a little bit bigger than the more recent ones, but it's certainly not bigger than the swings that we saw around a year ago in September of 20 or October. It is a little bit concerning here that we did test this 50-day moving average here. We did close above it at the end of the week, and I do expect to, at the very least, retest the top of this channel somewhere around 44.20 next week. If not, get a breakout, something where we break above this line, maybe back test here briefly around 4,400, and then continue upwards at an accelerated pace after this short-term correction. Looking at the NASDAQ, it's actually relatively unremarkable despite the moves in the S&Ps and a possible breakdown of that trend line. You can see it's been in this longer-term trend line all the way back to July of last year. And I don't expect this to break down fully. I think we might see a retest similar to what we saw in March or May of this year, testing the 100-day EMA. But I expect to find support here, maybe even retesting the bottom of this channel, but not a full breakdown of this current trend. And perhaps this down move in tech, because it's been moving along this upper trend line for so long, is actually what's driving the down moves across the broader markets, especially in the S&P 500. With the top 5 companies in that being very tech heavy. But once we see a little bit of support here, in fact, I don't see much more downside risk here. If we look at the actual percentage, there's maybe 2 to 2.5% left before we find a support level. And then once we hit that level, there's a significant amount of upside potential, around 15% in the NASDAQ to that upper trend line. Of course, it could take longer than the next 2 months or so until we see that, but that would be a very strong move up for the NASDAQ, which would obviously drive upward price action in the S&P 500. Looking at a different sector here with XOP, or the oil and gas ETF, it's been on a very strong bull run over the recent months. It did have a small correction here of around 20% off of the highs in around 50 days, which I guess you would say is pretty dramatic, but we did then retrace all of that price action to the upside, and we're currently sitting at the recent highs, right around $100, and you could certainly argue that this is a breakout above resistance, similar to what we saw here, but it's hard to say exactly where it could go after that because there is so much price action history previously above this price, which could indicate much larger upside over the coming years. Moving over here to TLT, or the 20-year Treasury, you can see we had this very dramatic down move in March of this year, which has driven higher prices in stocks, until we found a bottom somewhere around May of this year. And since then, we've rallied quite a bit, up around 12%. But we did hit this resistance point, which seems like we've broken down below. And then we may get a retest here of that line and then a move back down, which would give us a downward potential of around 5%, which definitely would be good for stocks. Anytime you see bonds going down, we tend to see upward price action in stocks. And lastly here, I want to touch on gold. Gold has been trending down quite a bit since around August of last year, with a very large move of 18% from the highs, And since then, we've bounced not very much, but a little bit, up around 4%. And it seems like we found some support, at least on this lower trend line, right around 160 or 161, with an upside potential here of around 7 or 8%. This resistance line here at 170 for GLD seems like it's pretty strong, with multiple reactions over time here. Or we could potentially see more movement in between here, which would expand that upward price action until we eventually hit that upward resistance, at which time I expect to see a breakout above that resistance point, because this overall trend on the long term is still very bullish. Even if we have this short-term choppiness, we're still trending well above the longer-term trend lines, which will eventually push this price higher. Moving over to my investments, starting here with Worthy. No big changes here, still maintaining that $6,000 level. I may drop this down to $5,000 just because I don't feel like I need as much cash reserves right now. And I do want to move this over into my Tastyworks account just in case I get assigned on any shares, which certainly looks possible the way that Beyond Meat has been trending down more than I expected. Moving over to GroundFloor, current account value at almost $6,000 with around $200 on hand. It's because this is at the beginning of the month and I did make my monthly contribution there, and I'm starting to invest that money in $20 increments. I did move that down from $30 just to spread out the money a little bit more. I think I mentioned that before, but just trying to get a little bit more diversity in this portfolio. You can see I'm spread across over 200 loans at this point, which is good. It allows me to assume a little bit less risk with any individual loans and make sure that I can cover losses in case that happens. So far, I've had no notes go unpaid. There's been a couple of defaults, but they all eventually pay, or the company did do a repossession and sold that property. They're not very clear on exactly what they do to recoup that money, unless you do go into LRO investments, and you can look here at the performance level, at the performance tab, and you can see exactly what they're doing here. It says, notice of default has been sent to the borrower, if not paid off by maturity, and the default is not cured, foreclosure procedures will commence. And you can go through here and look at any of these defaults. There is quite a few actually, across the 200 notes, and they'll tell you any kind of details individually. And you can always contact the company specifically about notes and try to get more details that way. Otherwise, continuing to perform pretty well. Invested almost exclusively in C notes right now. A couple of D notes, A and B notes, but otherwise currently made just over $40. With $1,400 invested, and that's because some of these notes are pretty short term, and I've tried to stay closer to the shorter term notes, which seems to be working fairly well. Moving over here to Fundrise, this has been clearly the best performer across my portfolio here recently, with the markets getting pretty stagnant and dipping off of their highs. Fundrise continues to trend upwards pretty strongly, and we did get our appreciation assessment for the end of third quarter today, actually. And you can see it went from 39,400 all the way up to 42,149. So really big move here for the appreciation, somewhere around $2,400–2,500 in just appreciation for Q3. They did do an announcement here for their Q3 performance on 1 October. I will do a video going in deeper on what that looks like in the future. So make sure you subscribe so you don't miss out on that. Otherwise, looking at my performance, you can see here Q3 is complete, and we had really large returns here in the Growth REIT as well as the Heartland REIT, Growth 2 REIT, as well as the Balanced REIT. Over 10% in just Q3, almost up to 20%, which is really dramatic. And then we had Growth 3 REIT, 21%, and then the Interval Fund, which is the fund that I'm growing the fastest here at 15%. Somehow they do math to get from, somehow they say 35% year to date for this fund. Not quite sure how that works out because this should be closer to 25%, not 35%, but overall 16% returns this year, and we still have a whole nother quarter to go. Looking at my TSP, you can see this is my largest holding here at $85,000. I don't talk about this every week because it's very straightforward. The C fund is the S&P 500, and the S fund is the total stock market index. And I add just a few $100s in here every single month, and that's some from my paycheck and some from my employer matching. And it gets deposited right around the second of every single month. So these slowly tick up over time, and all dividends are reinvested into this hypothetical stock price listed here. And this is the quote-unquote total number of shares that I would own based on the index that they have created. Otherwise, no changes here, just continuing to add to these funds. As my long-term retirement account, this is a Roth IRA for the most part, but of course employer matching has to go into a traditional 401k because it isn't taxed as it goes in, and I don't think there's anything I can do to change that. Moving over here to my M1 accounts, starting with Retire. They did add this new feature here looking at dividends. I think this is because they understand investors with this platform are focused on dividends, and you can see exactly where that money is coming from. The vast majority is coming from real estate, dividend ETFs, and finance, which is expected, and then you see less dividends here with tech and consumer, as well as industrials. Otherwise, looking at the fund over the past month, not great, down almost 4%. With around $50 in dividends. Every single sector has been down, but that's because the market is in a correction, and that is to be expected. Moving over here to my higher yield savings account, a little bit less on the losses, down only 3%, and that's because you have different bond funds here that are only losing a little bit less than 1%, 0.44%. Simon Property did well at only 0.87%, and then bonds and long-term corporate debt at just over 1%. Which helps bring down that average, as is to be expected. Then you can see here dividends coming from mostly ETFs as well as their real estate holdings. Otherwise, still doing fine, doing exactly what I need it to do, and currently reinvesting all dividends back into this fund. Moving over to Robinhood, not a great return over the past 3 months, down almost 5.5%. Still doing fine on the year, but you can see it generally resembles the S&Ps where we had these two larger dips and then kind of flattened out here over the past few months. Not quite as much of a sell-off in terms of what the S&Ps are doing, but still doing fine. But still would like to see a little bit more upward price action. Otherwise, you can see my investments here with Pinterest. Wendy's down a little bit. The biggest loser has actually been Chewy, which has been down quite dramatically. Looking a little bit closer at Chewy, you can see really strong down move all the way from the highs here of around almost $122, almost $120 to current prices at $67. Even from $95 down to where we are has been a pretty large down move, but I do expect this to recover or at least see some upward price action as my prices are actually right here at $70, and I think we will get above that price by the time that this option expires. Otherwise, silver has also been down quite a bit. DraftKings and Tattooed Chef have been very strong trades. Moving over here to Tastyworks, you can see my account values here, just under 14,000 and just under 67,000. A little bit of losses here on the individual account, primarily focused around Match Group, which rallied really aggressively against some calls that I had. Otherwise, Boeing continues to be a strong trade for me, and if you've been watching the channel, I've been talking about this one quite a bit. Beyond Meat, you can see here is a pretty big loser for me. Stock's down at 105. With my put price being here at 110, and I'll probably look to roll this out in time next week. Otherwise, gold continues to be a pretty good trade in both of my accounts. Realty Income has been down quite a bit. And then we have Roku, which needs to recover for me going into next week also. And then Yeti, another big loser actually in my IRA here, down well below the $90 put price that I had. But I do expect Yeti to grow over time. And you can see that really large sell-off that it's had from around that $100 price point down to $85 over the past few weeks after a very strong uptrend where we never even tested the 144 EMA, and we are currently trading below it. And you can see, well, we are very oversold here, and I do expect to see some upward price action over the next few weeks with this stock. Moving over here to my monthly tracker, you can see stocks were down a little bit because I haven't been buying them as aggressively as I have been adding money to my trading accounts. And then real estate took that big up move because of the appreciation for Q3 in Fundrise. And then everything else has been basically flat. Bonds continue to be right where they need to be, Lending Club trending down, and cash basically bouncing between paycheck to paycheck. Overall, 2.5% up, creating a new all-time high for total invested capital. Let me know down in the comments section what you think of the current downturn in the overall markets. Do you think it's going to be a long-term top, or is this a short-term correction? Let me know down in the comments section. Of course, if you like any of these investment platforms you've seen here, there are links in the description that get you free stuff, and it does support the channel. Make sure you like and subscribe if you got any value out of this video, and hit the bell so you don't miss out on any future content. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. Today's jelly is Far Cry 6. This is the official release trailer, and I'm mentioning it here because it does come out within the next few days, and I've become a huge fan of this series. It's basically like playing a movie. They always have very good storytelling, and the gameplay is always pretty fun to go along with it. So here's a little bit of that trailer, and if you want to watch the whole thing, it is linked in the description.
Perfect, but useless. I have something for you, Diego. Give me your hands.
Papa.
Now, the grenade is simple. It has 4 basic parts. The shell, which contains the explosive, the fuse, the handle, and of course, the pin.
What are you doing?
Breathe, Diego. Breathe. The pin simply holds the handle in place. It is only when you let go that this grenade goes boom. Follow me. Now.
This kind of detailed storytelling is what really sets the Far Cry series apart, and ever since I've discovered it, I've played almost all of them, at least the ones that have been released on the Xbox One, and if you're lucky enough to get an Xbox Series X, they look absolutely amazing. Let me know down in the comment section what you think of the Far Cry series, and with that, have a great day.